All right, guys, I am going to analyze a property. I was actually just going to look at a few properties and figured why not pop on a recording and go through it a little bit. So I'm going to share everything on my screen here and go through kind of just a quick back of a napkin analysis. Again, this is a property that I got through an email. This is I don't know if it's a wholesaler, so Franklin Street. They're not a wholesaler, but I'm on their list. So I don't often look at these, but I thought for today's purposes we could take a peek at this particular deal. It's in Orrville, Ohio. So again, the first kind of some important things just when you're doing a quick 5-minute analysis. First is location, so market. This isn't necessarily in one of my approved markets, but again, for today's purposes, we can go through it. But typically, I will look I'll only look at deals within our approved markets. And I do that through a market scorecard that possibly I'll take you through on another video. But that scorecard will, tell me whether or not I should even be looking in that market. But let's just say that this is a market that we would look in. Also, what kind of asset, what class of the asset I'm looking at. We don't typically play in the Class A space, so B, C, or potentially even, I guess, D, if you're really looking at something that needs some work. So gross potential rents, so the number of units times the average unit price. Can also get a rent roll to confirm this. I mean, obviously, the further you get down the line, the more data and specific data that you want. But again, this is just a back of a napkin analysis. If you get the unit mix in place and in-place rent, you can figure out gross potential rent as well. So basically, you got to know how much revenue the facility is generating, the occupancy, so where the occupancy rate is currently at, operating expenses. Again, you'll drill down to these further once you kind of signed a letter of an intent or put it under contract. However, generally speaking, I'm using a range from 30 to 40%. I like to be conservative typically, so I'll use the upper end of that. Again, if you're underwriting a Class A facility, you might be looking at the lower end of that, but typically between 30 and 40%. So your gross potential rent times your operating expense will get you your NOI. All right, and then cap rate. So depending on the market, again, cap rates are going to be lower in a Class A market compared to a Class C. You want to make sure you're buying appropriately, at least in my opinion, and you got to figure out where you want to buy the asset at. In order for you to make money, if you've got investors to pay, things like that. So you're gonna have to determine kind of where you want to purchase that as far as cap rate. And then a general rule of thumb is making sure that the replacement cost is higher than the investment you're making, right? So you don't want to spend $150 a square foot on a facility when the replacement cost is $95 a square foot. So not a good situation to be in. So let's take a quick peek. Again, email will provide, if you're getting an email from a broker like this, it'll typically provide information like the unit mix or the number of units. These numbers get a little wonky as far as the cap rates they're figuring. You'll notice these brokers will throw in their own pro forma, and I do all that myself. I'll use it as a general rule of thumb, but some of the information that we do need obviously is we'll go over to my little cheat sheet here. Is again the occupancy, and then we're looking for trying to figure out how much revenue is being generated. You could do that a couple of different ways. If we've got the square footage, and we've got the price per square foot that's being charged, we can then come up with your gross potential rent that way. You could look at a rent roll. and gather that information from the rent roll and figure it out as well. But we're going to need those kind of inputs to figure out, what the gross potential rent could be. So square footage, again, your target cap rate we're going to put in here, and I'm going to go through this in a second. Number of units, essentially getting again to our gross potential rent, any other income. Again, back of a napkin analysis, we might not have this information, or it could be very nominal, at least at this point. Operating expenses, like I said, what I typically like to do, even if they're providing it to me, is plug in, say, 40% or 38%, just to be conservative. Again, essentially all we're trying to do is figure out, is the list price, fair, or would you pay that price, or what price would you pay for the asset? Again, we're taking into consideration that this is a market that you want to play in, right? Okay, so I think I have this open over here. So if we open up the OM and we pop into the documents here, it's going to have an OM of some sort that we could read through and try to get some of this information. Okay, and it looks like a decent looking facility. So let's scroll down here. It will also give you information about the demographics. I did, let's see, quickly throw in, because I don't know anything about this area. One tool I use initially to see what I can get is ChatGPT. As you can see, it had some trouble getting the actual data, which happens sometimes with chat. So if we go in here, a lot of times they'll give you that information as well. Again, I always confirm and verify this information. So looks like they're asking 2.5, gives you the address, the actual size of the property, the number of units, and the occupancy. See, they already do some of these calculations, which again, you could pull this data again for just a back of napkin. That's really what we're trying to get at. Really just some ammo to go back to the broker and start a conversation, right? Because typically in these deals that are coming from a broker, are going to be overpriced. They're not going to be the right deal for you to, to really make any money on. But you could use it as a starting point to again, just build relationships with brokers. So there you go. It gives you some information about the per capita. So 7.9 feet per capita, which again is, the average again is right around that, right? National average. So it's hard to say if it's undersupplied, oversupplied. Strong average household income, I like to see, of 78,000. That looks pretty good. This number right here, again, if I'm acting like this is a market we'd play in. However, looking at that, that's typically not a very strong population density, for any type of expansion, or really just to keep your facility full, drive rates. So that would be a concern. But anyhow, let's start plugging in some of these numbers. So 2.5 million is the list price. So let's get that down. 2.5 million. I think I saw what was 86 something for occupancy. 85.64. 85.64. So that's decent occupancy. We could take a gander. That's pretty close to full or stable for sure. I'd be interested to see what they've done with the rates over the last couple of years. But all right, so they've got a current NOI. Well, let's see if we can get. Sometimes they'll provide. Here we go. So here's a pro forma. Again, we would be confirming this, and like I don't know where that's coming from. We're gonna take their word for it. So 300,618 is the gross potential income. Where am I at? Here we go. So 300,618 is what I said. So 300,618. We're going to put here. So they're already giving us the gross potential rent. So what we can do is I'll just add, let's call it, we'll do 38%. We'll do a quick calculation on 38% of 300,000, 618, whoops, times, so that's going to be 114,000. So that's how much we're going to be spending in expenses every year. So again, about roughly 38%. So that'll give us an estimated NOI. So if we do the math, we could do it the other way. So it's 300,000, 618, and I keep doing that. 0.65. So 195,401. $195,401 is our NOI. You could see in here, a back of napkin, you're typically not going to have your annual debt service. If you happen to have some, a general rule of thumb you want to throw in there just for numbers purposes, you can. However, I've kept it there, again, just in case I ever wanted to or anybody wanted to put it in there. All right, so next, let's see, square footage we didn't add. Let's get that in there. I know I saw it somewhere. All right, yeah, so 181 units, looks like 28,840. 28,840. 28,840 is the square feet. And what did I say, 181 units. There we go. 181 units. Let's see, the current cap rate they're selling this at. Let's do a little math. All right, so the current cap rate they're trying to sell this at would be, let's see, we got that in the right spot. Yes, 7.8. All right. Oh, there we go. So we did the math so they're selling it for 2.5 million. We're making 195,401. So at the end of the day, that's a 7.8 cap. Oops, that's my target cap rate. I didn't put it in the wrong spot. But anyways, I'm actually going to put my target cap rate. So I'm looking to buy this at an 8.5 cap. Per their numbers, their current cap rate is 7.8. So a little bit of a discrepancy. Again, just gives you information to go back to the broker or the seller with and start a conversation, right? So how far are we off here? So if we are going to get this price at your desired cap rate, we would take the estimated NOI, right? So 195,401. And we would divide it by our desired cap rate, so 0.085. And that would give us our all-in price of 2.298, 835, right? So we are a few $100,000 off of the list price. So again, if we're just doing, not going any deeper into DSCR, so we're not looking to see how we can cover our debt, at least at this point. We're going to take this number, the list price, based off, and also take into the account the information that we know about the market, competition. So we're going to have to figure, all that out as well. But the numbers wise, you have a number to start a conversation with the seller or the broker. And that could be a very simple conversation like, hey, thanks for sending this over. Did a little bit of just initial back of napkin, not quite at that price. Like to talk to you a little bit about, how you got there and maybe how I got to mine, and we can have a conversation. So it could